Humanity has reached a turning point, with upcoming events set to bring profound changes to societies worldwide. It's evident that the United States will soon be affected as well. A recent official statement by the European Union reveals that the Council Presidency and European Parliament representatives have reached a provisional agreement on a new framework for a European digital identity wallet, focusing to ensure a trusted and secure digital identity for all Europeans. How does this impact European citizens? And what are the global implications? Is it a potentially risky or beneficial development? In this video, we explore the benefits and risks associated with this emerging paradigm. The digital identity wallets enable users to establish and manage their digital identity, storing official documents like driver's licenses, medical prescriptions, and educational qualifications. According to the European Union, it provides seamless digital authentication for accessing a variety of online services, both public and private within the European Union. This includes authorizing transactions and performing tasks like logging into bank accounts, making payments, applying for loans, submitting tax declarations, enrolling in universities, and much more. One should always consider critical decisions and reflect on why things unfold the way they do. It's important to gain perspective before forming firm opinions, as proper explanation of a decision can lead to understanding and even sympathy. However, the recent government move by the European Union is particularly perplexing. Instinctively, one might question if it's real. Is this reminiscent of George Orwell's blockbuster movie, 1984, with the concept of being constantly monitored now becoming a reality? If one disagrees, there seems to be little room for recourse. While in theory it can be officially voted down, the likelihood of that happening is slim. Currently, Brussels is progressing towards a European superstate with a flawed parliament, a trajectory that appears to lead to autocracy. Surprisingly, the groundbreaking story has received little attention from mainstream media. Major international financial news sources have notably omitted any mention of it, leaving coverage to independent social media journalists. This absence is unexpected, as one would anticipate prominent media outlets to feature this news prominently on their front pages. This decision signifies the beginning of a complete reset for the European Union and the European financial world. While it may be premature to declare it as the start of the European Union's collapse, it will undoubtedly usher in challenging times and have significant implications for all citizens. Most European citizens are unaware of these developments, let alone in agreement with them. Let's rewind to the genesis of this significant financial transformation. In the early 1970s, European leaders deliberated on the prospect of establishing a unified currency to fortify their global standing. This vision crystallized into reality with the ratification of the 1992 treaty, an epochal moment that not only gave birth to the European Union, but also laid the groundwork for the introduction of the euro, a singular currency for the region. For a nation to partake in this common currency, stringent criteria were set, encompassing requisites such as maintaining a budget deficit below 3% of gross domestic product and a debt ratio lower than 60% of gross domestic product. However, these criteria were widely disregarded after the currency's inception. Noteworthy is the fact that certain countries subjected the adoption of the euro to a public referendum, with some electorates casting dissenting votes. Nevertheless, the currency was implemented despite the opposition. Fast forward to the present, against the backdrop of global upheavals, the European Union has initiated the trial phase of the central bank digital currency and subsequently introduced the digital passport. Again, one should always wager both sides. On the positive side, the in due time mandatory digital identification and a central bank digital currency could bring convenience to your life. The European Union claims that your life will be dramatically improved because of your digital passport. It will store everything you own and are. Everything nice and neat in a tidy digital passport, like, for example, your smartphone. No more hassle with cash money, lack of information, or identification when needed. It is all in there. The official press release of the European Central Bank stated the following when it comes to the central bank digital currency. As consumers, our payment behavior is increasingly oriented towards bank cards, mobile phones, and wearables. We are paying with cash less and less often. Only 1 in 5 in-store payments are made in cash. At the Central European Bank, we believe it is important that cash remains available in the future. That is why we are looking at how to give cash a digital twist by creating a digital euro, or the central bank digital currency. It can help to ensure that everyone in the euro area retains access to a simple, universally accepted, secure, and reliable public means of payment to complement existing payment options. Moreover, the digital euro can also serve as a fallback payment system, allowing payments to continue when other payment systems temporarily fail. However, a significant bottleneck emerges when considering the diverse economic landscapes across European countries. Nations like the Netherlands, where digital payments are already ingrained, and virtually everyone possesses a bank account, are unlikely to be at the forefront of resistance to this digital evolution. For them, the transition may appear as a seamless extension of their existing digital payment habits, potentially contributing to an elevation in their living standards. On the flip side, countries such as Germany, Spain, Italy, or Greece exhibit a more pronounced reliance on cash transactions. The impact of this digital transformation would be markedly different for these societies. Across Europe, there is a discernible uptick in skepticism towards the perceived authoritarian tendencies of the European Union. Understanding how the European Union plans to navigate these intricacies in implementation becomes crucial. The lingering question is whether the European Union will adopt a softer approach, considering the growing distrust, or opt for a more stringent strategy. The precedent set by Nigeria, where cash was abruptly banned, serves as a stark example of the hard way. However, replicating such a swift transition across Europe seems improbable in the near future unless drastic measures are taken. The dynamics of this digital transformation will undoubtedly be shaped by the delicate balance between the European Union's goals and the varied societal norms prevalent across member states. The concerns voiced by privacy and security experts across Europe highlight a critical dimension of the impending digital transformation. These experts have formally cautioned the European Union regarding the potential infringement on privacy and freedom inherent in the new digital passport and central bank digital currency framework. The comprehensive nature of this system, encompassing biometric data, financial details, medical records, and various other personal information, raises alarms about the instantaneous and continuous tracking and verification by the European government. Such an all-encompassing monitoring mechanism implies a level of government control that extends into virtually every aspect of an individual's life. This expansive surveillance approach is perceived by experts as a violation of numerous international privacy laws. Furthermore, skepticism is cast on the European Union's assurance of safeguarding this extensive system. Privacy and security experts assert that the European Union's claims in this regard are, according to their professional assessment, entirely implausible. The consensus among these experts is that, sooner or later, a savvy individual could exploit vulnerabilities in the system, potentially resulting in a catastrophic scenario where the sensitive information of every European citizen becomes vulnerable to unauthorized access. Contemplating such a breach underscores the far-reaching implications of this digital infrastructure. The potential fallout from a security lapse could be profound, with the privacy and security of individuals hanging in a precarious balance. The question of whether the benefits of such a system outweigh the associated risks is a crucial consideration that demands careful scrutiny. "I've got nothing to hide" is a phrase often heard when diving into discussions about the impact of the digital age on our society. However, it's not just about watching old computer games get prettier or storage prices doing their biennial dance. Digitization. Now, there's a loaded term. Sure, we're all in for streamlining business processes, but there's more at stake here. We're towing the line of some fundamental principles. Take the European Digital Services Act, for instance, flexing its muscles to make platforms like Twitter and Facebook scrub away misinformation is at the whim of European bigwigs. The real head-scratcher. When does information cross the line into misinformation territory? And are we unwittingly inviting censorship through the back door? Luckily, even within the European Parliament, Some members expressed the concerns too, like Ms. Joanna Kotar, a German European Parliament member. She gave a speech in the Bundestag and stated, "Nobody needs the digital euro or a digital passport, except for the European Central Bank and the politicians who have something else in mind. And that something else is the total surveillance of citizens and control of the financial system, which is on the loose with the gaining popularity of cryptocurrencies. Much is promised with the digital euro," Ms. Kotar elaborated further. "Data protection, everything secure. No one intends to spy on anyone. Only this is as credible as the promises made during the euro introduction. Promises that were made back then included no bailout, the 3% rule, and prohibition of monetary state financing. Nowadays, the European Central Bank does nothing else, and the Maastricht Treaty is waste paper. And again, the European Union promises top data protection for the digital passport, and tomorrow every transaction and every movement will be monitored," Ms. Kotar said. "Creation in a world where our data and privacy is already being under threats. Money is the last bastion of freedom. In the wrong hands, the digital euro and digital passport could become a tool used by European institutions, governments, and banks to transform the Eurozone into a digital dictatorship, just like the dystopia we see in Chinese society. If we don't vote against it, it will not be an if this will happen, but more a when it will happen, and saving the best for last. I hear the rest of the world say, 'Hey, this is about Europe. I don't care. I don't care. I don't live in Europe.' Well, one should see Europe as a cautionary tale because it's coming to the United States too. As we speak, the Federal Reserve is actively working together with the Biden administration on the very same digital system.